Hi guys, good morning. You're welcome to my commentary this week. It's been a while. I dropped a commentary. I've had really a very busy week, but I'm glad we're back today. And I really hope that you're gonna have an amazing trading week, this time. And so to begin with, today we're gonna start with analyzing the Forex Factory calendar of events, just to show you potential high or medium impact news events to anticipate during the week. Remember that usually you're paying attention to the high and medium impact news events, and you're also avoiding news events like the CPI, the FOMC, and the NFP. Fortunately, NFP is usually just first week of every month, but the CPI and FOMC would usually show up during course of the month. So we have about today is Tuesday, and we only have medium impact news events on the dollar, the euro, and what do I see again? I think just the dollar and the euro. We have medium impact news events. The yellow boxes are indicating no impact. The orange boxes are indicating medium impact, and the red boxes signify high impact. So you are paying attention to the type of impact, the time the impact is happening, the date, and the currency asset that the impact is going to be affecting. All right, this helps you know when to anticipate some level of volatility on the assets that you're trading. On Wednesday, 26th of March 2025, you see that we have CPI on the GBP at the London session, 8 a.m. GMT +1. And so you can also set up your time to your country's local time on Forex Factory Economic Calendar. Just click the time options and set up your time to ensure you get to know when exactly the event is happening in your country or your country's local time. So just go through all the economic calendar. Thursday we have high impact on the dollar at 1:30 p.m. This is during the New York session, so we should anticipate volatility during the New York session. Then Friday again, GBP, Canadian dollar, and also the dollar, we have high impact in this event. So the best pairs to trade this week should be the dollar paired up with the GBP or the dollar paired up with the euro, since we see there's high and medium impact news events across the dollar and the euro USD during the week. Then we go to the dollar index, because the dollar index is the benchmark asset for all the dollar and dollar associated currency. We'd like to know what's happening on the dollar and implement the opposite on foreign currency: euro, GBP USD, NZD USD, AUD USD. These are foreign currencies we like to trade opposite of what the dollar is doing, but the dollar is the benchmark asset. So we like to know what the dollar is doing, then we implement the opposite on the foreign currency. Okay, so this is the weekly time frame. Remember that we study order flow and directional bias on the higher time frame, the monthly, the weekly, and the daily time frame. And clearly you would see that price action has previously been bearish. The last few weeks has been bearish for the dollar. The dollar sold into the sell side liquidity pool residing below that old low. On the monthly time frame was the fair value gap and also the institutional order flow entry drill. The fair value by the right, the fair value by the left, price repriced into that level. And we've been saying that we'd like to see two things happen: a reaction around this level that should create some level of volatility to the upside if we're going to continue bullish, and if we're going to go bearish, we should see price action still trade into the internal range on the weekly before we sell the dollar. But clearly you would see that this was an expansion to the upside. Price consolidated, traded into that discount, fair value or the buy side imbalance, sell side inefficiency in confluence with the mitigation block by the left right here. Price traded into that level, created that bullish expansion leading to shift of structure after taking out the previous low here. So I see the breaker, the fair value in the discount of this immediate range, the low to the high. Now we are right below that, so we should see some level of bullish repricing. But if you look at the bigger picture again, you would see that something deeper than what you're just seeing here has happened. What happened? We see price actually traded into a bearish mitigation block right here by the left. You see that level, that was a bearish mitigation block. Why is it a mitigation block? Of course, some of you have been following me for quite some time. You know the difference between a breaker and a mitigation block. Price created failure swing and created shift of market structure bearish. We see price action traded into that level right there and created a displacement lower, consolidated, swept the high of that consolidation, traded into that bearish order block right here. So if you were just seeing the immediate or this current price action, you're not going to know that something deeper has happened, and would like to really see the dollar reprice into this discount. This is a bearish mitigation. This is a bullish mitigation. For us, is one of the models that we usually talk about in our mentorship community, especially those of you who are on the one-on-one mentorship program. Those of you who are looking for quality mentorship, you're looking for close attention, you want me to be your accountability partner, you want me to closely watch how you are trading and have access to your investor password and ensure that you're trading the right way. And I will ensure you comply also to our risk management standards so that you don't lose money unnecessarily, and so that we facilitate your growth as fast as possible. Then the one-on-one mentorship is what you're looking for. Just check the link on the description of the video, send a DM. My personal assistant is going to put you through the registration process and you're going to join the winning team. I'm going to show you why you should join the winning team, but just make sure you stay till the end of the video. Okay, so on the weekly time frame, we saw that displacement to the downside. Look at the momentum in the sell candles after we traded into that monthly bearish order block. On the weekly, it's actually a sell side imbalance, buy side inefficiency. Why did I say that? You see the low of the sell candle right there and the high of the sell candle right there. That is a CB, sell side imbalance, buy side inefficiency. Sell side imbalance, buy side inefficiency. That is a CB. Price traded into that level and created that displacement into the downside, okay, leading to shift of structure. I would like to see the dollar trade back into this bullish order block that was violated right here. All right, for us, this is a breaker. We'd like to see price trade into that level. Why is it a breaker? Because we see liquidity taking above the highs right here before shift of structure below. So I would like to see the dollar reprice into that level or the bearish order block right here before we sell again into what we see as a low resistance liquidity around the lows here. I'd like to see the dollar really trade into those levels. On the daily time frame, you're simply studying market structure. You would like to see price create market structure in direction of order flow, lower low, lower highs, because we are in a bearish order flow. So looking at this, technically you've seen the dollar has been creating lower highs, lower low expansion. We'd like to see repricing into a premium level of that immediate range between the high to the low. We'd like to see price trade above 50%, or 50% is equilibrium, above 50% is premium. We like to be selling a premium market and we buy a discount market. So I'll be looking to buy the dollar until it gets into that level, then I'll be looking to sell the dollar the more. This is what I'm looking at on the daily time frame. On the 1 hour, we'll be looking to get more buys on the dollar until we trade into those levels. So the previous weeks we've seen the dollar created that shift of structure on the 1 hour, traded into internal range mitigation block. Right here, you see that failure swing here before the shift of structure, that bullish mitigation, the dollar traded into that level. That is our first displacement again, creating expansions, accumulation of contract. Price again created another expansion. Today is Tuesday, and usually Tuesdays we expect to see price form the low of the week in a bullish market, because weekly market profile teaches that price action would form high or low of the week between Monday, Tuesday, and Wednesday, distribute into the week and form what we call the weekly reversal on Thursday. Then Friday closes the week with a lower closing in a bullish week and a higher closing in a bearish week. So this is this week, and this is Monday price action. Price open on Monday, took out that that Sunday low and traded into that bullish order block, then created another shift of structure bullish. I would like to see this guy return into this fair value gap right there, or alternatively, because we've seen this take out the low, traded into the bullish order block, create a shift of structure, that is a bullish breaker. I would like to see this guy trade into that bullish breaker, and if you take note, you would see that there's a tiny fair value gap right at the breaker. I would like to see this guy trade into that level, and I'll look to buy the dollar. And while I'm buying the dollar, I'll be looking to short Euro USD, GBP USD, foreign currencies into the drawn liquidity. This would be my anticipation for the dollar. Trade into that level right here. Make sure you mark the fair value on the 1 hour time frame. You see the fair value gap is very tiny. Institutions will leave this fingerprint deliberately, hiding it from the typical retail who is not trained to see these things. Very good. So we'd like to see the dollar trade into that level, then we take a buy into the drawn liquidity higher using confirmatory signatures on lower time frame into the drawn liquidity, while we sell Euro and GBP. Until this is ready, I'm not going to be doing anything on the Euro nor the GBP USD. Then let's quickly take a look at the GBPJPY just to see. I know there are a lot of you who are trading the GBPJPY. Remember, previous week I gave you guys an analysis. We called GBPJPY bullish specifically into the drawn liquidity right there. Price action actually expanded into that level, last week, then traded back into that bullish order block again using confirmatory signature on the 1 hour, took a buy into the draw on liquidity. All right, so this week, what are we seeing? Let's take a look at the higher time frame, the weekly. Clearly you see we're still bullish. Where are we looking at? We're looking at the external range drawn liquidity, the relative equal highs right here. Do you see that there's a fair value gap right above it? That's a simple way to know where the drawn liquidity is. The fair value above the equal highs right there, that's the drawn liquidity. On the daily, we'll be looking for market structure to support this idea of buying the GBPJPY, and structure of course has been creating higher high, higher low, again expansion. We like to buy into the drawn liquidity. On the 1 hour, we frame our buy entries on the 1 hour. So on the 1 hour, what will I be looking to do? I'll be looking to buy GBPJPY the more. When I see this guy trade into that bullish order block, I'd like it to take out that low and find support at the bullish order block right there. Also, because if you measure that range, that's Monday's range between the low to the high, I would like to buy below 50%, especially because there's a drawn liquidity there. That old low, the bullish order block there with the fair value gap, that will be where I'll be looking to buy GBPJPY. If it doesn't get there and moves into the next drawn liquidity, totally fine. Better a missing trade or a missed trade than a losing trade. Then we look at gold. Gold is going to be the last thing we're going to be looking at today. Look at the weekly time frame. Gold has been bullish. We've seen gold very bullish. I would like to see gold this week trade into that internal range fair value gap here. I would like to see gold trade into that fair value. Then I buy gold the more. Why? Because gold is bullish. You see that we're keeping it very simple. We're not complicating anything. Keep it very simple. So we'd like to see gold tap into that fair value right here. Also, there's a bullish breaker. Took out the low, shift of structure. We'd like to see tap into that. Consequent encroachment of the fair value is 50% of that fair value and is confluencing with the high of that breaker. This is also resistance on support. Then on the 1 hour, we look to see that already price has created a bearish structure to trade into that level. Price created shift of market structure bearish, traded back into that bearish breaker because took out the high, shift of structure, traded back into the breaker right there, created another displacement, traded into the fair value right there, displacement structure into the breaker because price took out the high, created shift of structure bearish right there. You see that right there? Those of you who are in the one-on-one mentorship, you know exactly what to do around here. Price created another expansion, traded into that fair value. I'll be looking to find lower time frame confirmatory signatures for sell on 15 minutes. We sell again into. So what is the drawn liquidity for gold? Do you see that there's this lows right here, the old low, the relative equal lows here, too sweet to be the drawn liquidity, and we'll be looking to sell gold into those levels, Okay, this is the 15 minutes time frame. Gold just traded into that fair value right there. So once I see a 15 minutes swing high, I'm going to be shorting gold. Gold actually just took out the high. This will have been my first total sub sell above that high right there, stop loss above the high here, and I'll be waiting to see gold fade into the draw liquidity right below. Friends, this is my submission for the dollar and foreign currency. I'm going to counsel you guys to please use standard risk management in your trading this week. Don't over leverage. I said I was going to show you guys some of our trading performance in the mentorship community as at last week really, on Saturday, using the concepts that we teach. This was okay. I think I've showed you guys that trading performance. We did another one on Saturday with a little deposit of just about $100, and just 2 trades we were able to make $1,000, $96 profit. You see that on the volatility index. And guess what? These are some of the things you're going to be learning in the one-on-one mentorship community. I'm going to give you access to my high profitable trading models for doing these things consistently over a period of time, so that you can scale up your performance and become highly profitable. Don't forget, check the link on the description of the video for mentorship. Send a DM, and make sure you are subscribed to this channel for consistent updates and trading contents. Also join my free Telegram community. The link is on the description of the video for more educational content. Until next time, I wish you good luck, good trading.